We are back with the housing market update, a housing bubble update. Yes, it is a bubble. Hey everybody, JJ here on the BX4. It's Saturday. Welcome. Thank you for joining me. Let's go ahead and get right into it. We're going to talk about home prices. We're going to talk about inventory. We're going to talk about sales. And we're going to talk about how this housing market has failed to correct even during the shutdown. Prices are still up year over year. And that may come as a surprise to many people. If you've been on this channel, it should be no surprise. Housing is very important to keep it propped up because housing, once housing goes, usually the rest of the economy goes. So the Fed, they're not going to let that happen. Now, some people are asking, why are you talking about the Fed? Let's talk about home prices. It is the Fed that backstops this economy. So many of you know that. I'm preaching to the choir, but there are many new viewers here on the channel. The Fed actually creates or allows the boom and bust cycles to happen via their monetary policies and their actions, right? The Fed has unlimited tools to keep this market propped up. So we can look at price data, statistics, numbers, trends, charts. We can look at those things all day, but the bottom line is, underneath it all, you have to look at what are the intentions of the bankers, of the Fed, right? Remember, they have unlimited tools, unlimited fiat currency creation powers. That means they can buy debt, and they have been buying debt to a large degree. We've already eclipsed the Great Recession, 2007-2008 period Great Recession, Fed intervention. And it's not just me saying that. Just look at a couple articles here out of the past few months. U.S. News article right here. This came out just in April. The Fed doing whatever it takes to keep the economy afloat amid the crisis, right? This is coming out of their own mouths. Just look this up yourself. You don't have to believe me. You don't have to listen to me. They have admitted this. There is no debt limit. They can do whatever it takes to keep this propped up. Now the question is, and you tell me down in the comments, how long are they going to keep this propped up? There's a forbearance on foreclosures right now, evictions. That's a big impact on keeping this housing market from dropping. Another article here from back in March, right when the shutdown was first beginning, the Fed vows unlimited stimulus to halt the recession. Unlimited, there it is again. Out of their own mouths, folks. This is just not me, making stuff up, okay? Okay, with that said, let's get into some numbers here. Out of housingwire.com, home prices grew 5.5% in April, despite the pandemic, despite the shutdown. All right, key factors right here in why prices are up year over year. One, low inventory. Many sellers pulled their homes off the market during the shutdown for a few different reasons. Many people were just scared of having possibly infected people come to look at their homes. Many sellers were being cautious because there's a lot of sellers that like to sell and then buy a new home, either upsizing or downsizing or just relocating. And people were afraid to go out during this pandemic. We can't blame them. Also, a lot of sellers taking the wait and see approach. Many sellers figured it's not the best time to sell a home during record unemployment surge and an economic shutdown. All right, but the big question, in my opinion, is how many sellers, and this is yet to be seen, we'll see in the near future, how many sellers are waiting for this V-shaped recovery that we've been hearing so much about to put their home back on the market, hoping they'll get an even higher price for it once this miraculous V-shaped recovery actually takes shape. So again, we're yet to see how this plays out, but we're going to keep an eye on it for you. Okay, so low inventory, low mortgage rates. There's been a halt put on foreclosures. Also, another thing to add to this, how many home sellers that were putting their home on the market because they were in financial distress are now just taking advantage of this time because they know they cannot be foreclosed upon. So we could have some desperate sellers that are just waiting right now, taking advantage of these free months without having to pay their mortgage. Again, we'll have to see how it plays out. There's no way to get exact numbers on this, but we do know some pretty amazing numbers. How many homes are in forbearance? Let's take a look. Another Housing Wire article right here. Mortgage forbearances rise after 3 weeks of decline. So it looks like a lot of these sellers that are pulling their homes off the market, or even people that may not have intended on selling their home, the shutdown is starting to cause a financial pinch here. So now at this point, nearly 9% of U.S. mortgages have suspended payments, and that's up from 8.7% last week. So the trend is rising. And this puts the total at 4.7 million homeowners in forbearance. Folks, that is a lot of homes. If this market was allowed to function normally, where people that don't make their payments, they actually might get their home taken. If this was allowed to happen, you would see a record decline in home prices, even bigger than what we saw in the 2007-2008 financial crisis. All right, so it's the propping up of the banks, it's the deregulation of the banks, the elimination of the reserve requirement, as we mentioned, low mortgage rates, forbearance, forgiveness on over 100 million loans. Imagine if these other forms of debt or loans had to be paid, how much more pain that would cause a lot of these homeowners that are sitting it out right now. The credit cards that are delayed, the car payments that have been delayed and put on freeze. All right, now one thing that I like to say from time to time on this channel is that behind all of this, behind the price action and the movement in the housing market, is lending. If banks can continue to lend, then you're going to see inflationary pressure on prices. When banks pull back on lending, then you're going to see deflationary. So we know the banking system has been propped up now. Repo injections back in the fall of 2019. And since then, it's been more and more deregulation with the easing of the reserve requirements for the bank. The Volcker rule was recently also eased. We've got things like this, another Housing Wire article right here. And we've also got things like this, another Housing Wire article right here, CFPB to eliminate DTI requirement for qualified mortgage standards. So the debt to income requirement, a very important ratio for determining if homeowners are going to be able to handle the mortgage that they're being given. But we see a lot of these things are being eased, deregulation, lower mortgage payments, propping up the banks, freezing the payments, freezing the foreclosures. You get the picture. It's manipulation, it's intervention. So if you want to wait for the best time to buy a home, well, figure out what the Fed's going to do. What are the Fed's intentions? Are they going to let this market fall pretty soon? Are they going to keep it propped up till the end of the year? Are they going to keep it propped up forever and create infinite inflation? You let me know. But first, let's talk about some numbers out of California. DailyNews.com article right here. And why do we look at California? Well, California is typically the canary in the coal mine for the rest of the country. California's late mortgage payments triple. Only 2 states had bigger jumps since November. The states with bigger jumps were Alaska and Nevada. Right now, this triple in late mortgage payments in California is bigger to a larger degree versus the rest of the country. The rest of the country is averaging about a doubling of late mortgage payments. But now take a look at what's going on. There's news of a second shutdown, or a lot of businesses that started to open are reclosing because of the virus cases are starting to increase again. So probably more lockdowns, more trouble for businesses. And that means less jobs, less money velocity. And it's looking like it may get a lot worse before it gets better. Recent headline here, LA County hospitalizations continue to climb as officials plan to crack down on businesses. And it's going to be the small businesses that are going to be more heavily impacted by this crackdown. We know the large businesses, most of them did not even slow down. Most of them had increased businesses, the Walmarts, the Costcos, the Home Depots, the Sam's Clubs, the Targets, and so forth. And when talking about the housing market, there's typically 2 main views. One is the buyer waiting to buy, wishing that they would unfreeze this housing market and just let things function as normal. And yes, that means people are going to lose their homes. Nobody likes to see that. But at the same time, if you're a buyer waiting for a better price, you have to let the foreclosure process take its place. And maybe some of these people that lose their homes will still have a roof over their head. Maybe there's second homes and third homes that people bought, they're over leveraged, and now their tenants aren't paying. So maybe some of these people that took on excess rental properties, maybe they need to lose their homes. I hate to say it, but there's buyers out there that are renting that want to be homeowners. They're just waiting for affordable prices to come into play, and they see everything frozen, and they're saying, hey, this isn't fair. You know, we're waiting. We've been sitting here with the down payment sometimes for months, sometimes for years, and now finally something happens in the economy to correct these bubble home prices, and the powers that be are not letting prices correct to where they should be. And then you have the other side of the fence. The other argument is you have people that say, well, the banks, they need to step up and they need to help people. They need to keep these mortgages and payments frozen for as long as it takes. This sounds familiar, like the Fed, whatever it takes. The banks need to prop this up or help these homeowners as long as it takes because of this unseen, emergency that happened with the economy with the shutdown. Okay, I think, my opinion, I'm more of a free market person. I think whatever happens you need to let it happen because things happen for a reason. And if people are over leveraged and not prepared for a downturn or not prepared for an unseen event, that's nobody's fault but their own. Again, I don't want to see people lose their homes, but people that bought, many of them, maybe they shouldn't have bought. Maybe they should have rented. Maybe they should be living in a lower priced area. Right? You know what I'm saying? So let me know what you think on this. Should we just let the free market function and just let prices fall where they may, even though it may be some damage? Which on the flip side is also going to be a buying opportunity for maybe millions of people that have been waiting to buy a home. You let me know. Thanks for watching this update. Appreciate your support. Please smash that like button if you like what we talk about. It does help us get seen through the algorithms. Most importantly, come back for more and leave us a comment down below. Thank you.